Hi, and welcome to Trendy Options. Today I will be talking to you about how to identify targets. Targets are so important. I would have to say that targets, in my mind, are probably one of the most important parts of trading. In most cases, when I talk to traders, they always tell me, like, John, I got into a trade and immediately it reversed on me, whether they were short or long. Typically, when I go back to study this chart with those traders, I find that price had moved right into a target of supply or demand, and price had reversed. If the trader had known that these targets were there, this could have indeed helped the trader not take the trade, which is probably one of the most important parts of trading. And then also, it would have helped them stay patient for the right entry and execution of making that trade. Now, not all the time, like anything else, will be 100% accurate. But what I will tell you is finding targets and identifying them will up your game big time. So let's go ahead and let's talk about them. First, I'm going to tell you how to identify them. Now, there's several ways of finding out how to identify them. We can use candle structure. We can use trendy edges. Remember, looking at our previous video of trendy edges. Trendy edges find supply and demand for us. So to be quite honest, I find this to be the quickest way of finding targets using my methodology. Then there's, like I said, candle structure. It's a little bit more intense, takes a little bit more time, and I am going to go quickly over that with you on using candle structure. Now, the next thing is, what do you do when price gets to your target? We'll talk about that. And then, how do you trade off of a target? And then finally, how ATR, average true range, or average trading range, how that correlates with targets. Once we are finished with that, you should have a better understanding of how to identify targets, how to trade them, and most importantly, how to stay out of a trade when a target looms. Let's go ahead and get started here. Let's get with how to identify targets. The first thing I'm going to do is show you trendy edges because, well, they're easy. They're on your screen and they're there for reference for past and future targets. So this chart that I'm showing you here, folks, this is, just to review, this is your yearly edges, and this pink thing down here is your monthly. But what's most important about this screen is the fact that I'm only showing you current trendy edges. There is no past edges on this screen, okay? And I have another chart I will be showing you with the past edges to give you an idea of how they work. So let's just go over the edges for now. As you can see, the current edges don't mean much. Well, this one did here, the mid and the lower yearly edge. This was a target when price was down here. We moved up into the yearly edge. We resisted. Remember, when price is underneath an edge, we look for it to be resistance. It pulled back, and then finally, when it decided to break, it broke with force. And then our next edge, meaning the mid edge, was our target for Tesla. Now, why would we use something like the yearly edges? Well, with a lot of strength, we want to look at higher time frames to get the bigger picture. Then we want to use monthlies and so forth. Now, once again, this is only the current edges. So when price pulled back once upon a time, remember, we're always going to use range. We also talked about range and identifying where you put your Fibonacci's. Let's go ahead and just quick review here. You can see that the range started here. This right here, this little pocket was some demand, okay? And up here, previously there was supply. And you can see that once price met supply twice, it did roll over and it came all the way back to the origin of the move, okay? Now, how would you know that if you didn't know how to identify targets? or you didn't have the trendy edges? Well, the first thing would be the Fibonacci, right? So again, please go back and review if you did not. We're going to use your fib underneath the origin of the move to the pivot high. And you can see here we would use our methodology that Trendy teaches, and that would be the very bullish channel, extreme bullish here, bullish, neutral all in here. And once we break the 618 and close underneath here, you can see that price moves into the 73 and it bounced perfectly, or sorry, the 76, and then we push down into the 88.7, and then finally into the origin of the move where it found its legs. Okay, and you can see we can use Fibonacci's perfectly on the way up as well, and also the trendy edge. Okay, see how that's working. Now, let's go ahead and show you a chart with the past edges. So we're going to move this one out of the way just for a second. Now, this is the same chart with your past monthly and yearly edges, folks. This is exactly the same range I want you to see here. And right here, remember, is the origin of the move. And this is the top of that move. And you can see that once price started to move down, we can use, you go down and to the left. Once it hits here, down and to the left, down and to the left, down and to the left. Okay, so I just like to mark these for reference. This, you can see that this target, and this yearly, they all match up, right? So this would be a target. I could take a line and I can move it right in here. Okay, just like this. Okay, and just so I can show you. And let's make these in yellow. So we have some edges, and we have the yearly as well. Price moves down. Okay, this would be our first target, target 1. And you can see once it hit here, there was a nice move. It doesn't look like much, but this is 260 to about 280, 290. Very nice move there off of that target. And then as price breaks down again, we want to look down and to the left. Check that out. It's another yearly edge. And you can see that target 2 also worked as it picked up here around 230 and to about 260. Go down and to the left. We're going to come all the way down here, folks. So this could be, you could take these two targets. You could, you don't want to go through the candles. You just want to use what's down and to the left. We're going to take this one, and that would be target 3. And then we could use this previous year, target 4. And you could use this last monthly edge for target 5. Just depending on how many targets you want. Price keeps dropping, it closes below, you look for the next target, right? So we're going to use this until price finds a bottom and then reverses, and then we can do the same for targets to the upside. Once price came here, let's go ahead and zoom in this, we are going to use targets to the upside. How do we do this? We take our focus and we look up and we look left, up and we look left, up and we look left. Okay, so in this case, once we found a bottom here, we could use this as a target. And you can see here, once it pushed, it actually came down quite a bit. Our next target, the yearly, this would be our target. As you can see, to the tick, pushes back. To the tick, pushes back. Previous for targets. When you're intraday trading, it doesn't look like a bunch, folks, but this really works. Now, this was an earnings gap up, and then we traded this yesterday as well, and this worked really well. Okay, and as you can see, right there, and right there. They don't get easier than this, folks. If you don't have the trendy edges, you should probably reach out. The trendy edges are amazing, but I'm also going to teach you and review. I've already taught you how to find these by using Fibonacci's. This is how we use the edges from the from the package. Okay, this is how we use edges. Now let's talk about candle formation. Okay, so we're going to bring down the other chart here. And now we're going to get into candle formation. This is a little bit more time. Definitely takes a lot more time to figure out this kind of stuff, but we can make it easy. I'm going to make this really simple for you folks. Where price reverses, we want to be looking for the bigger moves. What do I mean by bigger moves? Well, if you look at these candles, they all have different sizes, right? They're all different sizes. We're going to use wicks, we're going to use bases, and we're going to use the size of the candle for targets. Okay, this is all impromptu as always. And I want to show you that here we can see that this candle here, there was a lot of pressure, selling pressure in this candle. Okay, as price reverses, I want to use the bottom of these strong candles as targets. I can use the wick. So I'm going to put a line there. See, price is here, folks. Line. And then I'm going to use, you can use the wick or you can use the body. This is going to be up to you. Okay. So in this case, I'm going to use the body. It's going to be my next target. This is as price moves up, folks. And then obviously, I got the yearly edge. I'm definitely going to use this. Okay. But if I weren't, I could use the wick here of this. We've already used the bottom of this candle. We have to find the next target, right? So we're going to use the edge here. We can use the wick of this base candle here. And let's just keep going. All right, let's see how these react. And you can see here, I'm looking for bigger candles. Bigger candles. If I don't have a bigger candle, I can use a wick. Okay, I can use this here, right in there. You can use the mid edge. You can use the top of the wick. Okay. And you can see here, even though my candles are green, this is some selling pressure here. We've already used down here. You can use this. And then right up here at the top of this selling pressure. Okay, folks? So these are all targets. Now, how do those line up? I want to show you, do these line up? Well, let's talk about the range really quick. All right. So this was the range, right? This is the range that we're using. Because price is moving up, I want to be looking up and to the left for targets. That's what I just showed you. Okay? Up and to the left. Now let's measure that with Fibonacci. And this, again, this was us not using any Fibonacci, just using some candle structure there. And let's see if this correlates to anything. Well, it kind of does if you look closely here. Right? It gets pretty darn close. You got 88.7, pretty close. The 618 right here, pretty close to the 302. So a quicker way of identifying targets can be through Fibonacci. Okay? As long as you understand where the range is that you need to place them. And again, go to your Fibonacci video to really understand that. Okay, so we're going to take this off. And you can see this is price moving into these targets and so forth. Now again, let me go to a white screen so that you guys can see a little bit differently here. Now in a down move, we typically, price, we call this, first of all, we call this continuation candles. This is when we have no bases. I mean, it's just selling pressure, usually caused by fear. Once price finds a bottom and starts to move up, I'm going to show you the easiest way to find targets. One, Fibonacci from the top here to the pivot low. The next one would be identifying the bottom of these. This would be target 1. This could be target 2. And this could be target 3. Now, once you have identified them by just using your eyes, you could go back and you could use Fibonacci and measure from pivot high into pivot low. And then you want to look at the correlation. Maybe this is the 38.2, okay? Maybe this is the 618, and maybe this up here is the 76.4. And really, just us looking at this, you can see where maybe these are in line with what I just taught you. Now, I can't use the Fibonacci on my white screen here because it will erase, but you can see that this is probably a pretty true representation of where those fibs would actually land on this, which is really neat, just by using the continuation candles and using the bottom of those. Okay? All right. So now there are cases where sometimes we get base candles inside of these candles. Okay? Just like this. Now in this case, what we can do, depending on the type of trader you are, if you're somewhat, let's say, a little bit more on the safe, then you will use this area, like I said, right? And those who want just a couple more points, or they want to squeeze out a little bit more, they might keep these targets here but trim there, but then maybe they want their targets. Okay, we're going to make this a different color, by the way, just so you don't get confused. So they will put their targets just here underneath the base of the candle. Okay? This is another way to identify your target. So instead of using the continuation candle at the bottom, I'm using the base for a target. Okay? The yellow is conservative, the pink is a little bit riskier. Okay? Both can be used to identify targets. Okay, so this was an example of how to find targets when price is moving down but has found a bottom, just like this, and then starts to move up into our targets. Okay. Now let's talk about, give me 1 second here. Now let's talk about on the way down. So we also have the opposite of that. Okay. We have these type of trades. Okay. And these are continuation candles to the upside. As price finds a top, let's just call it this here, and starts to reverse, how can we find targets? It is the same. We're going to use the continuation candles. This is target 1, target 2, and target 3. In some cases, these candles will have base candles. Okay? In those base candles, again, this is more the conservative route to find targets. And then we may have and or use the base candles. Okay? Just like that. These are going to be your targets. So what we're looking for is when price comes down into the targets, we're looking for this to be supported at this area. Again, you can use Fibonacci, and you could measure from pivot low to pivot high, and you would find that these probably come really close to your 38.2, your 50, your 76, and so forth. Okay? Now that I've shown you how to identify targets by using a little bit of candle structure here, okay, I'm going to teach you or give you what should we do at the targets? How do we trade them? Well, first of all, we've already got a signal to go short here. Okay, so hypothetically, we're going to short down into target 1, okay, which would be here. The idea in trading, especially with options or equity, is we're going to trim. The word trim means to take a portion of your existing options equity and sell at those targets. This is one of the most important parts of trading to lock in profits. So here at target 1, we would be letting go of some of that. Now, how do we trade at targets? We trim. And in this case, yes, we can build a base here. And this is where most people get out of their trades. And then the second or third candle they may see is this. And if you remember, folks, I taught this just a few minutes ago. This turns into a drop, a base, and a lower low. This is actually creating some supply at our target. What was support has now turned into resistance. So now we continue to stay short until target 2 is met. What do we do here? We trim again. Now let me go ahead and give you the example here of a base candle forming. We're still holding, but now we have made a higher high. Notice that it is a higher high over this down candle. Once the higher high is made, I'm out of my full position. Because in this case, price can move back up into what was previously support has turned into supply, and what you can get from there is another move down, or it can break right through. Depending on the spread between this target and this target, if you decided to close here, you could hold if the spread between these two targets is not going to hurt your position. Okay? Now, it all depends on the type of stock you're trading. If we're talking Amazon or NTES or SHOP or TTD, most likely between these two, I mean, you could be talking $10, which would be detrimental to the profits that you're already holding. If you're talking smaller cap stuff like Starbucks, Cisco, AT&T, then maybe this is only like 10 cents, folks. So maybe in this case, all you would do is just bring your stop down and have it over this structure here. So remember, we're short. You want to be looking for this type of structure, okay? We can bring our stops down and so forth. But for these trading purposes, I'm strictly showing you how to find targets and how we trade them. Okay, so in this case, let's say that price actually reversed, moved through supply, and just like the edges, folks, just like the edges, we create a breakthrough and then a base candle and then a higher high. Now I'm using this as support, and this target has now become my entry spot. My stop is underneath, and I'm looking for the move up into the previous supply. I can trim my calls here, and if we break, make a base, and make a higher high, guess what? Now I'm looking left for previous edges, previous candle formations, such as okay, see what I'm saying here? And then maybe, let's just say that there were bases in here. Okay, maybe your next target would have been here. And that's what we'll be going for. Okay, now this is using candle structure to find targets. All right. Now, one important thing that I did not put into this is wicks. Now, John, what do I do if there's a wick in here? Very simple, folks. Okay, now my wicks are going to look a little funny. I apologize. Let's go ahead and go back over here to white screen. Okay, and I'm going to make these for purposes. I'm going to make these really thick here. Okay, wick, you can choose several different options here. To me, now you have three options, folks. Okay, now you have three options. Okay, and let's just say this goes off the screen here. Price is moving up from here. Now you can use the wick depending on, again, look at the spread. If from here to here, it's $10, then of course I want to use the wick. So that's going to be target 1, target 2, and target 3. 1, 2, 3. Okay? All right, folks. I've shown you how to identify those using candle identification by pattern, looking at Fibonacci, structure, how to trade off of those. But I'm using a higher time frame. As you can see, I'm showing you the higher time frame. So the instructions here are to start with a higher time frame candle and get used to identifying this type of stuff because it's a lot easier using bigger candles. As you master finding targets, you can then start to use smaller time frames. Now, on this tutorial, I'm going to teach you how to set up a blueprint on the futures. And by doing that, I'm going to show you the smaller time frame. Okay? So let's go ahead and take a look at that. First thing I'm going to do here is let's come over to ES. All right, here we are. All right, and let's move this over. We're going to get to the 5-minute, just like that. All right, using everything that I just showed you, I'm going to take you step by step. And it doesn't matter if it's ES, it doesn't matter if it's Tesla, it doesn't matter what the name is, everyone. It doesn't matter if it's Forex, it doesn't matter if it's bonds, it doesn't matter what we're looking at here, okay? So we're gonna break this down for you. And again, this is all impromptu. So I'm gonna show you a couple different things here. First, let's just go with something super simple. This is the range. Just like on Tesla earlier that I showed you, this is your range, folks. Prices pull back. This is the list. You can see that. This is the previous list, which I do use as a target. Okay, the previous list. And I can also use past lists. Say there's a list over here that was from, Wednesday. I can use that as well. All right, just like the edges. All right, so first thing we're going to do is we're going to measure. Let's just go through the steps, okay? Let's do the easiest to what I find the most difficult. Let's do a measurement of this using Fibonacci's, okay? Because prices started to retrace, remember we start with the pivot low to the pivot high. Now, one more time, this is your review. We are hanging out at the 23.6 basically, which is your extreme bullish trend of what? Of only the range that we have identified. That is so important. This is the extreme channel of this range that we have identified. okay? And down here at the 38.2, this is bullish, extreme bullish, neutral, okay? Between under 30.16 to 30.10 is neutral. We don't really want to do anything there. Yes, you can trade them. They're targets. We can trade them. They're going to be a place where you either trim or you start to get long. Okay, so we're going to take this step by step. And you can see here, we're going to have targets. Now, you can set up a blueprint. You could simply say, I just want to trade the fibs. You're going to use on your thinkorswim, press down on your wheel on the mouse, and you're going to use your targets, which is the dollar sign. You can click on that. Now, if you want them to pop, I made them white. You're just going to click on it, right click, edit properties, price level, and this is going to come up. If you want the target to go all the way through the left so that you can just keep it on your screen, no matter how far you go back, you always know where your target is. You're going to make sure that your left extension is on. Just want to show you what that looks like. So I'm going to turn that on. Right extension on. Show name, I don't put anything. Show price, I have on the right, but you can put it on the left as well. Okay. And then it lets you know what the value is. If you wanted to, you could come in here and change this, right? So you know that ES increments are in quarters. Let's just say we want to make that, instead of 0.44, we could make that 5. I don't do that because I just don't have the time. But you can see here, it not only does it extend left, but it also changed to 3016.5. Now, let's go back in here. I'm going to click on it. I'm going to go ahead and edit. I'm going to take the left extension off. Just want to show you that. And then I could use the 50, the 618, and you can see here the 76 lines up with the previous list. And I could use the 88.7. Okay. Now, what do I do to the upside? Well, I could say this is going to be a target, which would be a double top. I love using those as targets. Okay. And then let's take these off and let's just use the candle structure between these two targets here. Since the spread is pretty wide, 30.19 to 30.26, I mean, that's like 7 points, guys. So 7 points is a lot on with future trading. So in this case, I'm going to go up and to the left, and I'm going to use another double top. You can see here, that would be my next target. Okay. All I do is, and then if I were to come across here and we look up and to the left, don't cut through candles, look up and to the left. This is a strong candle. Wouldn't you agree? Okay, this is a strong candle. This is a base. We could use the top of this candle. We could use the bottom of this base candle. Okay, let's just use the base here. This would be my other target. Now on my screen, I make these really nice. I use the axis here, and I can already see, it's kind of hard to explain, but you can see my crosshairs, they're lined up. So I'm moving them up and down so I can make the blueprint really nice. I just get underneath that base and it would look like something like this. So this is my blueprint for ES. Now, let's say that we're not going to use Fibonacci. Okay, we're just going to use candle structure. We look down and to the left. Okay, and you can see here, I go down. All right. We're going to go down and to the left here. We're going to use a double bottom. Okay, look at this nice strong move out of here, like I had talked about before. Really nice strong move. We're going to move this down. We're going to look down to the left. We want to get right there because that is where the stronger move came. This is where buyer stepped in. So we're going to use that. And then we're going to come down here and we're going to use the bottom of this candle. Okay, going to use the previous list. Okay, and then see this candle here, very strong candle as well. This also has to line up with the trendy edge. So I'm just going to come right there. Now, let's put our Fibonacci's on there one more time and see how these line up. And as you can see, they're pretty darn close. Pretty awesome how that works. Again, what made me find Fibonacci and use it the way I did was going, hey, this doesn't have to be so hard. We don't have to really look for candle structure. What we need to learn is how to identify those levels by using the right Fibonacci within the right sequence, within the right ranges. So this is how I set up a blueprint into the ES futures. And lastly, because it wasn't going to be a long target or topic, would be using ATR. What is so important about ATR? Average true range. It kind of tells you, how much will this move on a weekly basis, on a daily basis, and so forth. So right here, you can see, this was Tesla. We're going to come over here into ES. And when I'm looking at targets, I can always go over and just kind of get an idea of what the ATR is, okay? So previously, I'd given you targets on ES, all right? And if you bring that chart back up, give me 1 second here. And there it was right there. You can see that the targets are 30.26. Okay, this is just with a pivot high, but that's okay. You get the idea here. 30.26 into 3001. So basically about 26 points. Okay, and you can see here that the daily ATR is like 34. So if you think it's going to stay within that range, then you can say, hey, whatever I identified was only 26 points. Let's go ahead and go a little bit further down. So further down, I might use this wick down here. That's a bottom. I'm going to, and then I'm going to start looking at this candle structure over here, just like I showed you over here, and show you, what those targets look like. Previous list. Now we're talking 2994 into 3026. Okay. So now we're right around that ATR. So this is a good representation of using ATR to find my targets as well. Basically, I'm just giving you the same range that they're kind of expecting, but by using the methodology. All right, now that we've learned how to find targets, how to identify them using candle structure, a quick review of our Fibonacci targets, what to do when price gets there, remember trimming, and also how do we trade targets. And then finally, on a summary here, how to use your ATR after you're finished to make sure that you're within the range. It's very important. If you have targets that are, let's say, on an equity that are $15 away, and then you look at the weekly ATR and it's only $7, then, that type of target is not going to work for you unless you're looking at a monthly ATR, which might fall into the $15 range, just as a quick example. I hope that everything I showed you today really helps you out. If you have any questions, please reach out to me. Thank you again for your time and have a wonderful time. And I'm always here in the room and willing to help. Thank you.